What if I told you you could start investing with just the money in your pocket right now? Most people believe investing is only for the rich. They think you need thousands of dollars, a Wall Street advisor, and years of experience. But here's the truth. Waiting until you have a lot of money is the biggest mistake you can make. Because the secret to building wealth isn't how much you start with, it's how early you start. By the time you finish this video, you'll realize why waiting to invest is costing you money, and how you can begin growing your wealth today, even if you have very little to start with. Let's break it down. The myth of needing a lot of money to invest. Most people never start investing because they think they need to wait until they 1. Have a six-figure salary, 2. Have zero debt, 3. Have thousands saved up. But here's what no one tells you. Investing is about time, not money. If you invest just $100 today, thanks to compound interest, it could grow into thousands over time. The earlier you start, the easier it is to build wealth, even with small amounts. Let me show you how. Imagine two people. 1. Person A starts investing at 20 years old, just $50 a month. 2. Person B waits until they're 40 but invests $500 a month. Who has more money by retirement? Person A. Why? Because they gave their money more time to grow. That's the power of compound interest. Your money makes money, and that money makes even more money. So the real question isn't how much you can invest. The real question is, will you start now or keep waiting? Because waiting could cost you hundreds of thousands of dollars over time. So now you know why waiting to invest is the biggest mistake you can make. It's not about how much you have, it's about how early you start. But now comes the next big question. How do you actually start investing if you only have a little money? Most people think investing requires thousands of dollars or expensive financial advisors. But today, I'm going to show you exactly how you can start investing with just a few dollars. By the end of this, you'll know where to put your money, how to make it grow, and how to avoid beginner mistakes. Let's dive in. How to invest with almost no money. If you only have a few dollars to invest, where do you start? Here are the best beginner-friendly ways to start growing your money today. Fractional shares. Buying stocks with just a few dollars. Did you know you can own a piece of Apple, Amazon, or Tesla for less than $5? Thanks to fractional shares, you don't have to buy an entire stock. You can own a small percentage of any company. This means you can start investing in high-value stocks with as little as $1. Apps like Robinhood, M1 Finance, and Fidelity allow you to buy fractional shares without needing a fortune. Index funds. The easiest way to build wealth. If you don't want to pick individual stocks, index funds are your best friend. They let you invest in hundreds of companies at once, reducing risk and giving you solid long-term returns. The best part? You can start with just $10 or $20. One of the best index funds for beginners? The S&P 500. It tracks the top 500 U.S. companies and has historically returned 8–10% per year. That means even a small investment grows significantly over time. Dividend stocks. Getting paid to invest dividend stocks are companies that pay you money just for owning their shares. Even if the stock price doesn't skyrocket, you still earn passive income. Some of the best-known dividend stocks? 1. Coca-Cola. 2. McDonald's. 3. Johnson & Johnson. These companies have paid dividends for decades, even through recessions. The best part? You can reinvest those dividends, making your money grow even faster. Robo-advisors. Let AI invest for you. If you don't want to pick investments yourself, robo-advisors do the work for you. Apps like Wealthfront, Betterment, and Acorns automatically invest your money based on your goals. This is a great option for beginners who want a hands-off approach. The key to growing wealth consistency over time. Here's the secret. It's not about how much you invest. It's about how often you invest. Even if you can only invest $5, $10, or $50 per month, it adds up. A small, consistent investment beats waiting for the perfect moment to start, because the biggest mistake is doing nothing. But now that you know where to invest your money, there's one last thing you need to understand. How to avoid common mistakes that cost beginners money. By now, you know why waiting to invest is a mistake, and how you can start with just a few dollars. But here's the reality. Many beginners lose money not because they pick the wrong investments, but because they make mistakes that could have been avoided. And I don't want that to happen to you. So, in this final part, we're breaking down the biggest beginner investing mistakes and how to protect your money from day one. Because starting is great, but staying in the game and growing your wealth is even more important. Let's dive in. Mistake hash 1. Thinking you need to be an expert, one of the biggest reasons people don't start investing? They think they need to know everything first. They get stuck watching hours of videos, reading finance books, or waiting for the perfect time to invest. But here's the truth. You'll never feel 100% ready. The best investors learn by doing. Instead of waiting, start small, invest a little, and learn as you go. Because the longer you wait, the more money you're losing in potential growth. Mistake #2. Trying to get rich quick. Many beginners get excited about investing and start chasing hot stocks or crypto hype. They hear about a stock that could 10x or a crypto project that's about to explode. And instead of building wealth the right way, they throw their money into risky bets. What happens next? Most of these get-rich-quick investments crash, and beginners end up losing everything. The key to real investing success? Think long-term. Avoid chasing overnight gains. Stick to proven investments, index funds, strong stocks, and assets that grow over time. Be patient. The richest investors win by holding, not by gambling. Mistake #3. Selling in a panic. The stock market goes up and down. That's normal. But when beginners see their investments drop 5%, 10%, or even 20%, they panic and sell. They think, I don't want to lose more money. But here's what history shows. Every market crash has eventually recovered. The 2008 financial crisis? Stocks bounced back. The COVID crash in 2020? Stocks recovered in months. Those who stayed invested and kept buying more made the biggest gains. So remember, when the market drops, it's not a loss unless you sell. The best strategy? Stay invested, stay calm, and keep growing your wealth. Mistake #4. Not diversifying your investments. Some beginners put all their money into just one stock, one crypto coin, or one asset. That's risky, because if that one investment crashes, you lose everything. The solution? Diversification. Index funds let you invest in hundreds of stocks at once. Dividend stocks provide passive income while your portfolio grows. ETFs give you exposure to different industries. By spreading your money across multiple investments, you reduce risk while still building wealth. How to build confidence as a beginner. Investor. Many people don't start investing not because they don't have money, but because they're afraid of making a mistake. The fear of losing money, choosing the wrong investment, or not knowing what to do stops people from ever taking the first step. But here's the reality. Even the best investors made mistakes when they started. Warren Buffett, one of the richest investors in the world, made early stock picks that flopped. Elon Musk invested in startups that failed before he built Tesla and SpaceX. Even legendary traders have made bad bets and lost money along the way. So if you're worried about making a mistake, that's normal. The key isn't to avoid mistakes completely. It's to start small, learn as you go, and improve over time. Here's how you can build confidence as an investor. Start with money you can afford to invest. Don't put in your rent money or emergency savings. Start with small amounts, $10, $50, $100, just to get comfortable. Use simulated trading apps. Platforms like Webull or Investopedia let you practice investing with fake money so you can test strategies risk-free. Read about successful investors. Learning how they overcame challenges will help you realize that everyone starts somewhere. Invest in what you understand. If you don't understand how a company makes money, don't invest in it. Stick to simple, proven strategies like index funds and ETFs. Give yourself permission to be a beginner. No one expects you to be an expert on day one. Investing is a lifelong skill. The more you do it, the better you'll get. The most important thing? Just get started. Because once you take that first step, you'll gain confidence, knowledge, and experience that will make investing feel easier over time. The most important lesson: stay consistent. At the end of the day, investing success isn't about picking the perfect stock or timing the market. It's about staying consistent and letting time do the work. Even if you only invest $10, $50, or $100 a month over time, that small habit turns into real wealth. The biggest mistake? Not starting at all. Because the only people who lose in investing are the ones who never start. So now the real question is, are you ready to take action? Because the sooner you start, the bigger your wealth will grow. Like and subscribe for more investing strategies, financial tips, and wealth-building insights. Let's discuss in the comments.